All right,
There it
we
is.
are official. So, welcome back to the Brutally Honest podcast. The Brutally Honest Loan Officer podcast, but everything with this. I'm Stephen Brock.
And I am Derek Brown. We are both loan officers at the mortgage firm in Florida. So we've got another episode coming at you today. This is a fun one because we have another guest, none other than FSU superstar, 2022 FSU Business Hall of Fame member,
Wow.
founder and CEO of our amazing company, the mortgage firm. This is Brett Lindquist.
Wow. Nice introduction, man. Thank you. Appreciate that.
Thanks for joining us, man. We're super
Absolutely.
excited to have you.
Well,
It's,
I
I mean,
appreciate you having me. I hear you guys are doing a great job, so I wanted to see what it was all about.
well, we're having fun. Great job is in question. Having
Yeah, we're
fun,
having fun doing it.
yeah, that's our key there.
All right.
Uh, but let's get started. So, we ask every um, person that comes on our podcast the same initial question. Super important. Do you believe in aliens?
Yes.
There is no hesitation, nothing. Immediate yes. Love it. Okay. All right,
I like
Stephen.
Sherry. Sherry thought about it for a
You
moment where she said, "I don't
Yeah.
think so."
Yeah. So Brett believes in aliens. Okay. Have you ever met one?
Yes. I am one. I'm
Oh,
kidding. Yeah.
wow.
No, I do enjoy those shows. They're finally starting to show a lot more the aliens, that NASA's found. So I love it.
All right. Well, there you go, ladies and
Great,
gentlemen. Brett
great.
Lindquist believes in aliens.
All right, bro, Brett. So welcome to our podcast. So for those that don't know, like we know you, I will say, what are we? Are we considered I don't think we're considered a small business, a medium business, large business, but most people don't have this one-on-one with their CEO all the time. But give us a little background on yourself. Where are you from? How'd you get started in the mortgage business? Everything like that.
Okay. So, what's interesting, growing up, my father worked for Sheraton Hotels. And so I lived in Sheraton until I was 13, actually, all over the country. But we lived in hotels. And then when, when my parents first bought a house when I was 13, I remember standing in the front of the house on the road, looking at the house, going, how do people do this? And so it's really weird that at 13 years old, and now I'm doing what I thought of that thought 13 years later. So went to high school, of course, went to college at Florida State. I signed up for hotel restaurant management. And I thought, wait a minute, I don't want to do this because my father never left his job. I mean, he had to be a workaholic because he was around it all the time. And so I switched over to finance and majored in finance and real estate. Ended up, graduating school. And when I graduated, banks did most of the loans for housing. And so I kind of stumbled into it, believe it or not. Doug Turner, his stepson works with us, actually, Richard Peak, but he gave me my first job in the mortgage industry, and the rest is history. So I've been in it. This is my 40th year.
Wow. That's incredible. I'm 36 years old, so I was -4 when you got started in the business. How does that make you feel, Brett?
Yeah, I know. That's what I'm saying.
That's awesome. Man, Brett, I got to tell you, I'm really proud of you because throughout that little monologue, you did not mention swimming at FSU. That might be a first.
Well, you mentioned it in the monologue, so I guess is that coming? Actually,
uh,
so there's kind of a joke in our company because I always mention I swam at Florida State, but it also has to do with some of my philosophies. Um, I'm a big fan of having coaching, and I think it has a lot to do. Or a coach told me, I had a Navy SEAL coaching me that said, you like coaching because you got told what to do all the time by all your coaches. So I always have 3 or 4 coaches going all the time. And I'm a big fan of coaching. We have a coaching program within our company. So, and it's really important that we have that.
that's awesome. Um, okay, so that's when you got started in the mortgage business. What led you to start the mortgage firm? How did that get created?
So I was with 2 or 3 different companies before we started this one, and one of the partners, Russell Stewart, is a friend, and he called and said, "Hey, we're thinking about starting a company." This is 10 years into my being in the business, so I got a background of and knowledge about the business, and and then the other partner, Todd Pearson. Those two worked together, and they called me and said, "Hey, we're thinking about doing something." So that's how it started. I'm a team player, and I wouldn't have wanted to start something on my own. So it worked out great that we had two partners right off the bat, and we all kind of focus on our strengths. I'm big in sales. Todd's big in sales and ops, and Russell's an accountant, payroll and books guy. So what we were all able to use our strengths to grow the company. So it worked out great.
I love it. And here we are today.
Yes.
Or
30, was this our 30th year? We started in 95. So we're going on our 29th,
Yeah,
30th year.
29th, going
Yeah.
into 30.
Yeah.
wow.
Wow.
So with the history of the company, everything, and you're talking about what is your vision with the company, maybe in like the next 5 years? What are some of the main goals high up that we're trying to achieve?
Well, so let me step back a little bit. Going backward, we were into growth mode. After about 10 years, we had that mortgage meltdown hit in like 7, 8, 9, and we went, oh, we better start growing, or else we're going to be in trouble because the volumes dropped so much. So we had a growth strategy of adding like 3 to 5 branches a year, and that took place till about 3 years ago. And so right now we're super focused on technology and speed to close, speed to approval, and making sure that we have the best platform going forward with personal relationships with our loan officers, with the referral partners like realtors or builders or financial planners, and then also getting the loans done as quick as possible with great communication with the borrower, realtor, anybody who's involved with the loan, because that's where we get most of our business, right, is from referral partners like realtors or financial planners and accountants, and then our people we've done loans for, our database of people.
I love that. And I do think that, we stand apart from a lot of other mortgage companies out there. What do you think specifically helps our company differentiate itself from other mortgage lenders?
I think the biggest thing, our secret sauce, is the relationships within the company. So, we have our loan officers and managers have direct access to the head underwriter, head closer, head funders, everybody. So we want to make sure that everyone has a relationship instead of keeping people separated. And we also like to bring together the salespeople and the managers. A lot of companies are worried about mutiny on the bounty, that they're going to all get together and leave, and you just can't worry about that. If you do everything you can to help out the employees and the managers and the salespeople in particular, because they're bringing in the business, it's our job and responsibility to make sure that they're happy. We have the products for them to do well in the business. So that's kind of what we strive for.
Yeah, I think it's funny too, because there's so many times where we talk about communication in our line of work, and people a lot of times think that I'm explaining that I communicate with my borrowers or the realtor and stuff like that. But a lot of times I'm referring to the fact that I communicate with my team, with my company, with my underwriters, my CEO, my VP of operations and stuff like that. So the lines of communication are just open throughout.
To your point, everyone's in fear. Borrowers are in fear because they've heard so much bad stuff about the mortgage business. They're in fear until they close. It doesn't matter if they're buying a $2 million home or a $100,000 condo or something.
Right.
They're still worried because they've heard all the nightmares that go on. So it's our responsibility to make sure they're comfortable with the process. And then to your point, Derick, about team members, and if our thing with all companies should be is take care of your employees. So communication, especially with your team. If you're a loan officer and you have a loan partner or processor, you need to make sure that you're communicating well, and you have to treat people fairly and treat them how they want to be treated. And it's all about communication. If that stops, then there's going to be changes in the company, on your team, whatever group you pick. So
I will say, like, I had Jane call me yesterday, the head of underwriting, just call me like, hey, did you think about this on this file? We could possibly do it this way, kind of thing. I mean, with that particular file, like, we knew we were denying it because of the non-warrantable condo. The client didn't want an ARM product for that. So we were of course getting out of it, but it was
Right.
like, she didn't know that. So she just called like, hey, we can do this. And she just called me right off the bat, like, hey, before I deny, like, we can do this way, and that way, kind of thing. And you go to other companies, they're not going to do that. They're not going to call
That's
you. They're
great.
not, you don't have that direct access to anything.
I love hearing that. Great, man. All right.
It's great. So, what are some insights? I know we kind of went over the growth part of it, the strategies. I know we're going more technology. How do we plan to kind of achieve that to, like you said, to help the LOs, operations, everything else out there?
Well, there's a lot of technology coming out. I mean, there has been for years, but it's really getting, serious. I remember, before we started the company, the guy that owned the company I worked for said, there's not going to be loan officers in 5 years. And so, it's getting closer to that if we don't watch out. So, with the AI, and AI is a thing. So we have a mobile app that we're finishing up on, the mobile app, and it's going to go directly into an AI underwriting engine that approves it, and it's a Fannie Mae approval. So whatever it says the conditions are. So we'll have literally 1 day approvals if they upload the stuff that we need, and we'll close in the minimum time, which is what, 10 days. So
Yeah.
whatever the quickest time you can close, that's how quick we'll be able to close. So so that's our focus. The business that we are in, and good loan officer in, it's the relationship business with realtors, borrowers, whoever they're speaking to. Anyone can go to the online lenders and put in an application, and oh, you're approved. They'll connect with you either via email or text or a phone call and say you're approved. So they do things in a little bit different order than we do, but it's still a high technology game. And so, the challenging loans may not go through that way, but we need to have speed to approval and speed to close, and we're super focused on the technology piece, so it'll set us apart from a lot of other lenders in the market. But it's when you're asking me going forward, a risk for us is, I mean, you can get a car loan in a day, right? Or less, you can get car loan in an hour, whatever the time frame is. So why can't you get a mortgage? And that's where it's headed, and it's really headed that way now. And so it's just a lot closer to that point than it has been for in the industry in general.
Yeah, I don't think the loan officer will ever get out of it. The relationship is always going to be there.
Well,
I think
and
there's going to be somebody always involved in it, kind of thing.
when the stats are somewhere about 90% of people shop for homes online first, and 90% of people shop for mortgages online first before they speak to anybody. So with the technology that's out there, and some of these incredible videos of homes, and the flyovers, and just
virtual
the
tours and
virtual
stuff like
tours, all that stuff. I mean, you could really get a pretty good idea of what a house looks like. Now you can't, you can guess on the neighborhood or guess on the neighbors, and see if it's right for you. My son and daughter-in-law just moved to Nashville, and they didn't buy yet, but they found the place virtually. They didn't see the house before they got in, but they knew of neighbors and kids and all that stuff that really matched up well with them, because they had some friends living up there. So
awesome. So, all right, you brought it up. We're talking about a 1-day commitment, 10-day close. Like, are we allowed to broadcast that yet, or is that just what we're working towards?
well, it's
because I want to put it on a banner and let everybody know.
The underwriting piece is done.
Right.
So we're not far from having that. I mean, our goal was to make sure it's completely set up before the refis start kicking in. So that's, it's coming up soon, and so ours is coming up soon. But we've been working on it for about 6 months.
That's awesome. What do you think are some of the challenges that we're facing, in the current mortgage industry? I know there's negativity in the news or whatever, but as far as challenges, maybe it's competition or whatever, what are you seeing out there as one of our biggest challenges, and how are we preparing to address them as a company?
Well, there's the challenges are actually going to turn in, I think, to advantages. So what's happening is, you all know, it's February 2024 right now, and rates are still high. And the information came out this morning that inflation is still a little bit high. So we were expecting interest rates to drop like next month, and I don't think it's going to happen. So I do think the rates are going to be higher for longer. We were in this environment where rates were in the twos, threes, and fours for years. And then just in the last year and a half, they've gone up to 7, 8, and now they settle back down into the upper sixes, sevens right now. But basically the refis are cut off. So probably, I think the industry in general is down about 60 to 70% in overall volume. And with that, everyone's fighting for the same loan. Margins have squeezed. The good news for us is we've really watched our costs as the rates went up. So as business dropped, we focused on keeping our costs down. So we're able to keep our interest rates. Like, our rates right now are better than most, because other companies have to raise their margins to make up for the losses. I think the number I heard was 80% of lenders in 2023 lost money. So there's not many people in our category that actually made a little bit of money. We didn't lose, so that was good news. But what's happening? It's a high percentage of people are not renewing their license either. So there's a lot of mortgage people disappearing, in addition to retirements. And personally, if you listen to Barry Habib, I think he's he talks about looking back 32 years. What were the birth rates 32 years ago? Because that's the average age of a buyer, and they were pretty darn good. So I'm expecting a very good mortgage market going forward for probably 5 to 10 years. In addition, when the things start improving or normalizing for the market, and the stocks start rising, I think they're really going to start rising really quickly. There's like 7 trillion in cash with these different investment companies. So there's a lot of people sitting on the sidelines waiting for kind of this rush to happen. I think it's going to be a really good market for years to come. So if you're in the business, congratulations, stick with it. Don't get out.
Yeah, stay in the business. Exactly.
Unless you don't work for our company, then you can get out with.
Yeah, exactly. Yeah, stop by here first. We'll tell you some good news.
Yeah, there you go. So, I mean, we talked a lot of loan stuff, and we talked about some relationship stuff. So how does the company prioritize customer service? And can you kind of share an example recently that kind of improved customer satisfaction?
Yeah, so we are graded on customer satisfaction. We have been the #1 lender in the country with experience, and previously social survey, #1 in the country. And we've had lots of people in the top 50, 100. I think they had 70,000 loan officers at one time, and over 400 companies. I think that's the correct numbers, and we're #1. So our approval rating is really high. But to me, it's all about, like you all were talking about earlier, the communication. And that's what creates the higher survey results, is even if something bad goes wrong, let people know immediately, and that way there's time to deal with it. If you don't say anything, or you don't realize until the very end, the closing blows up, you aren't going to get a good survey. So it's all about the communication. And we recommend at least once a week connecting with the borrower, the realtors, title company, just to make sure everyone knows what's going on, everybody's on the same page. And then again, if there's an issue, everyone can help you solve, instead of you trying to figure it out on yourself by your own and on your own. And it usually doesn't work out well that way. So
I will say, because we're coaches on here, that it is not at least once a week. You must make that call once a week. We definitely got to put that out there. Once a week, you're definitely updating everybody.
And really, when you're going to be talking to the realtor probably several times a week, because you're doing business with them already, and then you give them an update, and listen. There's not enough contacts. I mean, you can contact somebody 3, 4, 5 times a week, and it's a heck of a lot better than zero. So
yes.
But
even there's times where I've made that phone call, like doing a Tuesday update, and there is no update to give. We're waiting on the appraisal. They know that. We're already through underwriting, or whatever, but there's just no update. We're sitting pretty, we're doing great. Or sometimes the appraisal's already in, we're conditionally approved. We're just waiting on time to pass so we can do
Right.
a credit refresh and stuff like that. But we're essentially clear to close, and making that call, letting them know like, hey, we're groovy. There is no update because we're just sitting pretty waiting. That's the best call to make.
Well,
And there was no update.
And also it's an opportunity to ask them for a referral. I mean, that's a big piece that,
There it is.
it just, you should be, you did a great job for them, and you should ask, if they know anybody that's looking to buy or sell right now, so it'll, if you don't ask, you won't receive, because they just aren't thinking, hey, this person needs something until you ask them. So that's a big piece of some of the updates too, is asking.
Okay. So there's some wisdom from Brett Lindquist. What other advice would you give to a loan officer that's currently working in our market?
Well, I mean, what's interesting, if you're a veteran, every veteran thinks, my gosh, why do I have to go make calls and to the referral partners? And if you stop, it's out of sight, out of mind. And you want to think it's not that way. But you guys know, we've been talking about connecting with your database. If any time in your career you connect with the people you've done loans for, especially in the last 2 years, now is the time to connect with them. And so, I haven't talked to him in a year and a half. Yeah, call him up and say, hey, this is Derick Brown with a mortgage firm, and I'm just letting you know I'm keeping an eye on rates for you. And when the rates get better, I'm going to connect with you and talk about refinancing. Do you have any information now you want to ask me? It's an easy conversation because you did a great job for them before, and they're happy to talk to you. Now, if you don't say your name and the company, they won't know who you are, because if you haven't called them, they forgot who you were after 6 months. I think the numbers are 70% of people forget who the realtor and the lender are within a year. So it's not that they meant to forget you, just no one's talked to you, and they have this 30-day window that they're speaking with you, so they just forgot your name. No problem, but let them know. They're gonna go, oh yeah, hey, good talking with you. I appreciate you calling. But so staying connected now, and then you have to continue calling on realtors. Oh my gosh, my realtors are retiring. Good, go get some more. Or a financial planner, pick an industry that you get a lot of business from. They're just not doing any business. Good, go get some more who are doing business, because you might have had 5 or 10 realtors or financial planners you did business with. Make it 20, because they're all doing less. And until things start rocking and rolling again, you have to get referrals. It's all about the referrals, because then you have an opportunity to ask for referrals from those referrals, and it snowballs. The people who are doing the best right now are hustling, and they're developing new relationships. They're connecting with them via either in person or Zoom, and just building new relationships. Why not while it's a little bit slower? I mean, you have to when it's a little bit slower like it is right now.
I saw something. I want to say, I think it was from one of these coaches in these programs. It was today or yesterday on social media, and it was like, when leads are down, I just double my efforts.
That's right.
I double my calls, I double my touches, I double everything, and just keep going at it, because it could be a slow period because of the market, holidays, whatever. But if you just double your work for 30 days, it's gonna jump up.
Yeah, and the reality is you aren't really doubling your effort, because you just aren't getting the calls you used to get. So you're not working on all those loans you normally would have worked on. So you're just kind of putting in the effort you were doing before, but you're just doubling up on the number of people you're talking to. Right?
Right.
Kind of like that, I guess. So,
well, and they're like, I mean, I was talking with Chris Wilson, a phenomenal loan officer, branch manager at our company. But this is, I think, like a year ago. She told the story of, she had gone on vacation. One of her loans just had a little hiccup, and it ended up still closing, but not without like some headaches and stuff like that. When she got back from vacation, she was like upset about it. The realtor was pissed. And this is one of her top realtors, like several referrals every single month, multiple closings, like for a year or whatever. And that person was mad at Chris. I guarantee you, if a good loan officer had called that realtor that day and asked for business, there might have been a switch. That happens to like the best of us. Sometimes things happen, it is what it is. But, had somebody called that agent that day, might have been a different story.
Derek,
You never know what's going on.
You brought up a good topic also. If there's a problem, call them more. Reach out to them more. Don't back off and say, oh my God, they're upset with me. Don't do that. The more that you're connecting with them, even if you say, hey, I'm going to call you back in an hour and a half. If you may not have an answer in an hour and a half, but you better call them an hour and a half, or you lied to them. If you give them a time frame, you have to do whatever you said you're going to do within that time frame. Now, and you may call them back and say, hey, I don't have an update yet, but I should know soon. I'm hoping by whatever time you want to put on there. But don't give a time frame, or don't say I'll call you tomorrow and then don't call them tomorrow. You have to do what you say you're going to do. Good point.
And I think that we do a lot of work up front to try our best to prevent those problems from happening. But I mean, as soon as a problem comes up, we're on it. Like, we don't try to hide around it or anything like that, because a lot of times we fix it. And I'd rather fix it sooner.
Right.
So no.
I always say we earn our income at pre-qual. Because if you mess up the pre-qual, you aren't going to close the loan.
Right.
And you aren't going to look, so where we earn our living is at pre-qual or initial contact. So
I get it. Steven, is there anything else you want to ask Brett, or Brett, anything else you want to add?
I don't have anything else.
If you're for your listeners, these guys just became coaches for our company, but if you're not getting coached, I'd highly recommend getting a coach, having someone hold you accountable. The different coaching programs, like our coaching program, we have 3 students with the coach on a call, but that way you're able to share information with, everyone can share information. Might have been a scenario or a new loan that someone's working on. So I'd highly recommend coaching if you haven't done it before. And you can start out.
They've got to do the research for it. Because one thing that is different and that I have always loved about our coaching group is that our coaches are actively producing loan officers in this business. So last year was a tough year, but it was one of my favorite years in coaching because of all the camaraderie and accountability that we had. And it came from people that were going through what I was going through. So there's some coaching programs out there that they've got a coach, but it's not a licensed loan officer. They're just going by the script of what you're supposed to do. Buddy, I don't know if I can take advice from somebody that's not dealing with what I'm dealing with,
Well, or if you don't do a coaching group, get an accountability partner with the company that you're working with, just to share ideas. Because it's not, this market, really for the last, in 2022, rates went up so fast from 3 to 7, and then up to 8 in 23, and it's settled back down a little bit, but still it's a shock. I mean, if you had, when I got in the business, 1983, rates were 14.5. People were still buying homes. Oh, by the way, it was 2 discount, 1 origination fee to get that rate. So it was 3 points and 14.5%. So, then the whole thing went to no points and all that stuff. So people still are buying homes no matter what. They have to, either getting transferred or they don't want to be in a renting situation. There's always movement on purchasing homes. And people say, oh, there's no inventory. There's inventory out there. There's things, or if you connect with realtors, they may have a listing that's about to come on the market that isn't up there yet. So if you have those relationships, then you're going to find out that something's coming up. So
I like that. That's a good point. I have a deal happening right now, completely off market. They were about to put it up. They told me, I have a buyer that would fit. Let's talk. And they're writing up a contract now. Yeah,
it's all about the hustle factor right now. And going back to what you're saying about the connecting with other people or loan officers that are going through what you're going through, it's a tough market. It's hard to keep your mind right. And something that I always recommend for people that are having either any kind of problem, marital problem or whatever, if you have to focus on yourself, make sure you're getting your rest, make sure you're eating decent, try to get some exercise in, make sure you're focusing on yourself. If you don't meditate, maybe learn how to meditate. But really the better you are mentally, the more you can, the better person that you're going to be, out there in the world, but you have to feel good about yourself in this market, because it is not easy. But if you stick with it, I think we're all going to have a really good time in the next several years. So I'm excited about the future.
Steven, any last words?
No, how am I supposed to follow up him after that?
I know. I'm all jacked up,
I
ready to
know.
go close some loans. Let's go help
I
some
got
people
phone calls
buy
to make
houses.
now.
Listen, man,
He
turn
is
on-
the sales guy.
turn on some great music you love. Just keep your spirits high, because I mean, people are falling out of the boat in our industry. They are getting out in droves, and when it starts coming back, it takes a while to start getting. If you just I'm going to get back into business, it takes a little while to get rolling again. And if you have all the relationships with these different people you're getting referrals from, they're going to stick with you, because the other people disappeared. They were gone for a year or two or whatever. So I'm telling you, I've seen a lot of these markets already, and the guys that stick with it, that focus on themselves and try to get better and learn like in the last couple of years, it's been a lot of new programs, right? I mean, you're doing odd things you normally probably may have not have done if it was super busy. So, but now you know about some programs that are, bank statement loans, or pick a
so well versed in non-QM last year. And I like 3 years ago, I didn't even know what non-QM stood for. You know what I mean? But last year we were trying to pull any loan in that we could, just to, keep our staff employed and keep food on the table. And then come to find out, some of these non-QM loans, they're easy.
Yeah.
Figure that. It's easy stuff. Like for us, I guess, I don't know. And maybe it's just some of the investors we work with, or maybe it's our training that we have, but I don't know. Yeah.
I think every, the lenders who offer those type of loans, I mean, they're not cranking either. So man, anything they can do to help, us out.
They're trying to pull stuff in the door too.
Yeah. So,
all right.
A lot of them are like, yeah, we don't take that low of a loan amount, but we will now.
Yeah.
That's right.
Yeah, because I had like a non-warrantable condo, and technically it was a studio, and we reached out to one of our investors that does not do studio condos. And I was like, I mean, this wall, it's almost not a studio. But and then I explained, like, we had a really strong borrower, and they're like, you know what, Derick, we'll do it. Okay. And there you go. Ask for the business, you shall receive.
That's it.
It's easy as that. All I did is ask.
Ask and you shall receive. That's exactly right.
Awesome. All right, Brett, I appreciate you coming on our little podcast here. Great time. Thanks for just being a part of it. All the great insight that you provided. Everyone, this is Brett Lindquist, CEO of the mortgage firm, 2022 Hall of Fame member for FSU Business. Congrats on that, by the way.
Thank you.
Was it last year that you got inducted in, or was it in 2022?
It was in 22. Yeah. Okay. So it was really, it's an honor, when you, out of the, I don't know, 20,000 business graduates, there's only I think it's 70 people now are in the Hall of Fame. So it's really a cool honor, and I'm very involved up there and mentor students, and just have a lot of great relationships. That's something. Well, one more thing that I highly recommend is get into different groups. Like when I coach these or mentor these students at Florida State, they're about to get their jobs, get into different groups. Like I'm involved with the Florida State group. I'm involved with a sales group. I'm involved with a coaching group. I'm, involved with the chamber. And so, and everyone should be doing that. Get out of the house, and meet more. The more people that they know what you're doing, the more opportunities that you're going to get. So,
is this the "I'm going to do great" speech that you had to do?
Do you want me to I'm going to do great things? I had to give a speech.
I want you to tell this story to end it off, because with people that are listening on here that are, everybody has sales reluctancy. So this is like,
you know what, I'm really glad you brought this up. It's a quick story, but I was going to give a speech, and I was introducing Hall of Fame members. This is a year before I got in, and it's in front of 500 people in Tuxes, and I'm like, am I going to pass out when I go up there? And it was the darndest thing. I told somebody, hey man, tonight I gotta give this speech. I said, oh, I hope I don't pass out. And they go, you're gonna do great. And I was like, huh, okay. And so then I told someone else, because I'm like freaking out, that I got to give this speech. And so I told someone else, and they said the same thing. Man, you're going to do great. And then we're at the event, and I'm sitting at a table, and there's a gal next to me who was actually getting into the Hall of Fame. And I said, I hope my knees don't buckle when I get up there. And she looked at me and said, you're going to do great. And it changed my world. I'm going to do great. Self-talk is so important that, I'm sitting there going, oh my God, I'm going to freak out or knees buckle or stutter or whatever. And I got up there and rocked it. One thing I would say to anybody who wants to do some public speaking is, tell a story about yourself or something that is related. Like I told a Florida State swimming story to a bunch of Florida State people. And, people are always interested in athletes and how they train and all that stuff. And I just told a story, and it got me comfortable because it's a story that I tell. And then I got comfortable in front of 500 people, with a mic in front of me. And so it really worked out great. But, it's if you don't do public speaking, it's nerve wracking. But if you want to do it, like you guys know, you've done it now, and you got to practice it, not be scared.
Yeah. And even when it comes to public speaking, we can say practice makes perfect, but still, we've done it. When you turn around and you see 200, 500 eyes staring at you, it's different. It is. But that's where hopefully, just all that practice comes through. So
yeah.
I love that story, man.
I don't even remember what I said up there, but he did great.
Yeah, he did great.
Well, so somebody had written the speech for me, and there's just words that I wouldn't use. And I started kind of reading some stuff. I said, guys, and this is in front of 500 people, I got to tell you, this isn't how I talk, so I'm going to go off screen. So probably 90% of what I said was, around the outline of what was written, but it was not, because I was like, saying the words, and it's just, I can't, I don't like reading in front of 500 people either. So it's just, anyway, enough of that. But I appreciate you guys having me on. Great time. Great job, guys.
Thanks for joining us. Everybody out there listening, again, thank you, Brett Lindquist, CEO of the mortgage firm. You're amazing. Thanks for joining us. And this is the Brutally Honest Loan Officer Podcast. Thank you, everyone. We'll see you next week.
See you guys.